Hello and welcome to a new video on mutual funds. Friends, asset allocation is perhaps the most important aspect of investing. The question to ask ourselves is, how do we split our funds across different investment options so that the risk is low and at the same time returns are also good? The solution lies in multi-asset funds, and the ICICI Prudential Multi-Asset Fund has been a leading performer in this category. So in this video, let's look at the details of this fund, its investment approach, past performance, and whether or not you should invest. So make sure to watch this video till the end and do consider subscribing to our channel for mutual fund related content. Let's get started with asset allocation. Asset allocation in simple words is splitting your investments across different asset classes to have a well-diversified portfolio. In the investment world, there are four major asset classes. One is equity, which has the highest potential for growth. Second is debt, which offers stable returns. Third is gold and silver, which work as a good hedging option against inflation. And the fourth asset class is real estate. Now, what if you have a fund that invests in all these asset classes and manages the allocation in accordance to the current market trend? Wouldn't that be great? This is what the ICICI Prudential Multi-Asset Fund does. Let's have a close look at its details. The ICICI Prudential Multi-Asset Fund is a highly diversified scheme which aims to invest across market capitalizations and various asset classes with the aim to generate higher returns than its benchmark over a long-term investment duration. So this fund invests in equity, fixed income securities, gold and real estate. Within equity, this fund can invest across large, mid and small cap stocks. This fund comes in the aggressive hybrid fund category and follows a dynamic asset allocation strategy. Let's have a quick look at its investment approach. The fund maintains anywhere between 10 to 80% in equity and in general maintains an average of 65% in stocks. The dynamic asset allocation model is very useful because the fund manager rebalances the portfolio on a need basis. The fund follows an in-house valuation model which gives an indication of whether the equity markets are over or underpriced. So when the markets are cheap, the fund manager may find it appropriate to increase allocation in equity, and when the markets are expensive, allocation may change from equity to fixed income, gold, silver and real estate. The fund maintains anywhere between 10 to 35% in fixed income securities, 10 to 30% in gold and silver, and 0 to 10% in real estate, that is, through REITs and InvITs. Having understood the investment approach of this fund, let's have a quick look at its portfolio and past performance. In the past few months, the fund has increased its equity allocation as the valuations appear reasonable. The net equity exposure as of April 2023 stands at 67%, out of which 58% is in large caps, 6% in mid caps, and 3% is in small caps. The top four sectors that this fund invests in are banks, auto, power, and software. The top five stock holdings are NTPC, ICICI Bank, ONGC, Reliance, and Airtel. As of now, this fund has 29% allocated to fixed income securities, and the balance is in gold and silver. As far as the performance of this fund is concerned, this fund has outperformed its peers in every time frame, and since inception in 2002, this fund has delivered almost 21% annualized returns, which is terrific. Since majority of the portfolio is in equity, this fund attracts equity taxation on the capital gains. So should you consider investing in this fund? Well, there is absolutely no reason why you should not have this fund in your investment portfolio. Here is why. This fund reduces risk by having allocation in fixed income and gold. It has the potential of higher returns as majority is invested in equity. It has comfortably outperformed the rest of the competition. The fund manager does the job of rebalancing the portfolio to protect downside risk and also maintain reasonable returns. Since majority of the investment is in equity, this fund attracts equity taxation for the capital gains on the investment. This is another advantage as equity taxations are lower. This fund can work as a great option for regular cash flow to systematic withdrawal plans. It is suitable for both the younger generation and also those who are in the retirement phase of life. The fund is managed by S. Narain, who has a wealth of experience in the markets. With all of this in mind, it is highly recommended that investments be made in this fund, which can be in both the lump sum and SIP modes. An ideal investment duration in this fund is 3 years and above. That was our review on the ICICI Prudential Multi-Asset Fund. Hope you found it informative and do give this video a like and subscribe for more videos on mutual funds. Thanks for watching.